Hey, how's it going, guys? Coinbase is going public. This highly anticipated direct listing IPO deal is set for April 14th, 2021, with stock ticker COIN at the valuation of a mind-blowing $100 billion, almost the same size as Goldman Sachs. So how did a 10-year-old crypto startup value as much as a 150-year-old investment banking giant? In this video, I'll deep dive into what is truly going on behind this insane Coinbase valuation, share with you guys everything you need to know about this Coinbase IPO, and most importantly, help you guys decide if you should buy Coinbase stocks or not. Alright, let's get started. On April 6, 2021, for the very first time, Coinbase publicly released their quarterly earnings report, and it was mind-blowing. The company reported about $1.8 billion in revenue for just the first quarter of 2021. Here are some of the key highlights. Coinbase currently has 56 million verified users, with active monthly transacting users of 6.1 million. Total asset on platform worth about $223 billion. That is equivalent to 11% of the entire crypto asset market value. And this also includes the $122 billion of assets that are owned by the institutional investors. Total trading volume of the first quarter was about $335 billion in dollar terms. And most importantly, Coinbase was able to secure a net income of close to $800 million after all expenses. That translates to a 44% profit margin. Remember, all these numbers were just for one single quarter. Now let's move on and take a look at how Coinbase performed on some of the key growth metrics. From 2019 to 2020, these are the realized actual numbers that Coinbase reported to their VC investors. I won't repeat all these numbers one by one. You guys can pause this video and go through them by yourself. But what I do want to highlight are two things. First, the year-over-year growth rate is definitely massive, and it is accelerating at a faster pace. As a financial exchange company, Coinbase is having an even higher growth rate than those high-flying tech companies. Second, Coinbase is already net profit positive by 2020, a year before the IPO. This is huge, guys, for a company that is less than 10-year-old with such massive growth rate, especially considering the fact that from 2019 to 2020 was crypto's worst bear market, and most of the cryptocurrencies, including Bitcoin, were down 80 to 90%. And that makes this Coinbase growth rate from 2019 to 2020 even more impressive. Alright, here's the even more exciting part. From 2020 to 2021, we had an official transition from the bear market into a new bull market for the major cryptos like Bitcoin. Since we already have the Q1 earnings report of 2021, if we annualize the Q1 result into an estimated annual result with zero growth rate between each quarter, these are the crazy numbers that we can expect Coinbase will deliver by the end of 2021. Of course, this impressive growth rate has two major macro drivers at the background that we have to consider. First, from 2020 to 2021, the crypto bull market is back. Bitcoin went up over 700% from the 2020 low, and Ethereum even went up over 1200% from the bottom of the last year. This definitely pushed Coinbase valuation big time. Second, there was a global pandemic going on from 2020 to 2021. Because of the crazy lockdowns and the stimulus checks, most of the people choose to gamble their money in the stock market and crypto markets. Same as other brokerage providers like Robinhood, Coinbase was also one of the companies that actually benefits from the COVID lockdown tremendously. So with these two macro tailwinds that are pushing the Coinbase massive growth potential, it is a very smart move for Coinbase to go public this year in 2021. But the key question is Coinbase overvalued or fair value at the valuation of $100 billion? Should we jump right in and buy Coinbase stocks, or should we wait for the right price? There are hundreds of different factors that can affect Coinbase stock price and valuation. But in general, Coinbase valuation is essentially affected by two major metrics. First is the active monthly transaction users. An active monthly transaction user means a user who either actively or passively makes at least one transaction on Coinbase every month. Why this matters? Coinbase is a crypto exchange company. Same as any other exchange companies, the core business is to charge different kinds of fees on their users whenever they make a buy or sell order. And that makes this monthly transacting user the single most important valuation metric to Coinbase, because that is where the majority of their revenue comes from. In fact, this number is so crucial that Coinbase even projected 3 different possible scenarios of their MTU growth for the remaining of 2021. Currently, by the first quarter, Coinbase has 6.1 million MTUs that generates $800 million in net income. If we annualize it to an entire year, that is a $3.2 billion in annual earnings. With a $100 billion valuation, that translates to a P/E ratio of 31 for Coinbase stocks. Based on the Coinbase own projections for the remaining of 2021, the best case scenario, Coinbase estimated their average 2021 MTUs could hit 7 million. That translates to a $3.7 billion annual net income and a PE ratio at 27. And the worst case scenario, Coinbase average 2021 MTUs would drop to 4 million. And that would mean that the annual earnings for 2021 would be $2.1 billion and their price to earnings ratio will be at 48. So with the IPO valuation of $100 billion, if you are buying Coinbase at the IPO price, you're basically paying 27 to 48 on the price to earnings ratio. Coinbase is a crypto exchange company. If we compare this PE ratio with other traditional exchange companies, Coinbase is considered extremely overvalued at $100 billion. But if we switch our angle and compare Coinbase to some other high-flying tech stocks like Tesla, Square, or Palantir, a PE ratio between 27 to 48 suddenly looks pretty reasonable. This shows there are definitely some rooms for the stock market FOMOs to chase Coinbase stocks to a higher price. But there's one thing we need to know that Coinbase is definitely neither a pure traditional exchange brokerage company nor a pure tech company. Instead of being supported by the underlying long-term secular growth technology, Coinbase is more like being supported by the cyclical trends of the underlying cryptocurrencies. And that leads to the second major factors that affects Bitcoin valuation, the growth of the underlying crypto market cap, which is heavily dominated by Bitcoin and Ethereum. Simply put, Coinbase share price will be very sensitive to the changes of Bitcoin and Ethereum's price movement. The higher the crypto price rally, the more fees Coinbase can earn from their users in dollar terms. And also, a crypto bull market can attract more users to jump on board and buy Bitcoin. This all can greatly boost Coinbase earnings, and increased earnings can translate to higher valuation, and vice versa. So, understanding the cycle of Bitcoin price is another key component to understand how to value Coinbase stocks. As I mentioned before in the previous videos, Bitcoin price always goes in cycles. Remember, right now, we're in the middle of the fourth halving cycle on the way up. Based on this stock to flow model, the peak of this current cycle could hit somewhere around $250,000 to $350,000 before the correction. Well, I'm not here to make any predictions on the Bitcoin price. The more important thing to understand here in this video is that Coinbase IPO price at this $100 billion valuation is in the middle of a major Bitcoin bull run, which means there are definitely some more rooms for Coinbase share price to go up from the IPO day during the current Bitcoin cycle. But if you decide to buy Bitcoin stock, you should expect that the share price might crash more than 50% when the current Bitcoin cycle is over, even though the Coinbase underlying business doesn't have any significant changes. There's another very unique highlight about this Coinbase IPO is that unlike other high-flying growth tech companies which usually do not generate positive earnings in the first couple of years after they go IPO, Coinbase is already a very profitable business with strong positive cash flow and a high profit margin. Based on all the requirements for inclusion in the S&P 500, we can reasonably believe that Coinbase can potentially join S&P 500 index like what Tesla did last year. That could be another game changer for Coinbase stock price and as well as the crypto community in general. So if you're planning to buy Coinbase stocks, apart from their MTU number and the Bitcoin price, the company's next 3 quarters earnings are also extremely important to watch. Because I'm sure there will be a lot of institutional investors are going to watch it closely and start to price in the possibilities of the Coinbase joining the S&P 500 before the retail crowd does. Alright, before you consider buying Coinbase stocks, there's one key risk you have to know about Coinbase, is that the competition of crypto exchange and the wallet business is increasingly heating up, and Coinbase was avoiding to address this issue in their first quarter earnings report. As I mentioned earlier, Coinbase is a crypto exchange company and their business model is very simple and linear. Over 90% of the crypto's revenue was generated from their users' transactions on the platform. There are mainly 2 ways Coinbase takes money out of their users' pocket: the fixed rate and the invisible spread. For the fixed rate, Coinbase is arguably the most expensive platform to buy Bitcoin. The fees they charge are much higher than their competitors. While such high transaction fees could be Coinbase's short-term profit boosting strategy that hypes up IPO price, but I definitely do not see how such high fees can be sustainable in the long run, especially when there are more and more competitors jumping into this space. Next, like any other exchanges and brokers, no matter the stock exchange companies like Robinhood, money exchanges you saw at the airport, or crypto exchanges like Coinbase, making money from a buy and sell spread is a very common way to generate profits. But the problem is, for the traditional exchanges and the brokerage who are dealing with traditional financial assets, how much they can earn from a spread is heavily regulated. On the other hand, Coinbase is dealing with a brand new asset class called a cryptocurrency, and how much they can manipulate the spread has very minimal regulations. And apparently, Coinbase has been taking advantages of large spreads to maximize their profits over the past couple of years. It's safe to say, once Coinbase goes public, there will be more and more regulations on the crypto exchange spreads. And when that comes, it will significantly crash Coinbase earnings and as well as their profit margin. Cool, so here are some of my closing thoughts on buying Coinbase stocks. First, although Coinbase is a very exciting cash-generating machine in a very exciting new space called cryptocurrency, over the short term, I do believe that at the valuation of $100 billion, there are more downside than the upside for Coinbase to go. Second, if you plan to buy Coinbase stocks, you should prepare to embrace the extreme volatility. Make sure to keep your position size small and do not use any leverage, especially during the first couple of months. Coinbase chooses to do the direct listing approach instead of the traditional IPO process, which means there's no lock-in period for the Coinbase private investors. So we should expect that there will be quite a lot of insider selling activities during the first couple of months. And finally, on a more personal level, I do believe Coinbase is a very powerful brand compared with other crypto exchange companies. And the value of a brand is always the most challenging part to estimate, especially at the early stage. So over the long term, Coinbase is a powerful brand thriving in a groundbreaking space that is disrupting the $300 trillion global financial markets. I do see the possibility that Coinbase can be one of the potential 10 baggers and become another $1 trillion company in 10 years' time. Alright, that will be the end of this video. If you are new to this channel, my name is Vic. I make videos every week to share some of my thoughts on what is going on in the financial market. And I also share some educational contents to help your investing journey just like this one. If you are interested in the world of finance and business and find my videos being valuable to you, please consider subscribing. Again, thanks so much for watching guys, and I will see you guys soon.